Happy Friday. Another volatile week brings some positive light forward for mortgage interest rates from Treasury updates, the all important jobs report, and yes, spring is right around the corner. So, how can we prep our buyers now to ensure success? So, today let's dive in. First and foremost, though, mortgage interest rates. Yes, we seem to can't break seven, but 7% flat on the 30-year fix to open up this glorious Friday, down from last week's 7.5. But hey, each week it feels like we're seeing some incremental wins. So we're going to take it. So let's dive in. What happened this week? What are we focused on from the mortgage aspect? How we can guide our clients? And ultimately, as I mentioned, preparing for the spring buying season, which really is right around the corner. So let's first start with Treasury updates. New Treasury Secretary Scott Bessent came out and made some really market turning news, which bonds, mortgage rates ultimately liked. And it was around the pending reset of about $6 trillion in debt. And typically, to finance that debt, more treasuries are unloaded into the market, which has spun a tremendous amount of fear due to the fact that that ultimately would increase the cost of long-term yields, which in turn would have drove mortgage rates higher. But instead, Treasury Secretary Bessent mentioned that, look, we're going to allow this debt to roll off and we're going to reinvest. So we're not going to flood the market with new debt, which why we saw a pretty sharp rally at the beginning of the week. Then we fast forward to this morning, the all important, highly anticipated jobs report that dropped very early this morning. And it ultimately was a mixed bag where we missed on new job creations. Instead of the expected 175,000, we saw 143. Unemployment was expected to remain at 4.1, yet it dropped to 4%. And then importantly, the participation rate showing the amount of individuals participating within the labor market. So with that mixed bag, where historically, yes, a weaker number in new jobs created would dovetail into a sharp rally improvement in mortgage rates. That unemployment rate kind of going lower has got kind of the markets a little bit on edge. So it'll be interesting to see how this unfolds on this Friday and ultimately how it dovetails into next week. So definitely things we're going to continue to monitor as this report was really critical in where we see the Fed move from future rate cuts through the duration of 2025. And then lastly, spring. Yes, it is right around the corner. And yes, we know spring is that pinnacle part to kick off the home buying, home selling season. So how can we prepare now to ensure success in that spring market? So really it comes down to continued education. As I've advocated through the course of these weeks, we need to have our buyers informed. An informed buyer will make informed, quick decisions. So any and all updates you can share with your clients is critical. Additionally, ensure that their approvals are updated. If you need to have a second look on the approval, obviously we're always here to support. And like I mentioned last week, embracing technology. Technology should not be a hindrance. It should be a propellant. So really utilizing your CRM, the tools within the advancements in AI, so on and so forth, can be critical in ensuring that you're keeping top of mind with your clients to encourage and promote massive engagement. Where yes, this was a wild week. We're seeing some positive signs in rates. And let's continue to hope that we continue to see these go lower. So as always, let's make it a fantastic Friday and an even greater weekend. Thank you.